Well, inflation's come down a fair amount, but it's likely to come down some more in 2024. We think mid-twos is a reasonable expectation for core inflation by the middle of 2024. We have seen a lot of normalization in goods prices as supply chain issues have resolved, but importantly, services inflation remains somewhat high. We have had good supply developments on the services side also through the labor market. Wage growth is a risk to inflation going forward if it should hold up. So the U.S. is benefiting from these supply shocks. U.S. improvement has been a little faster than some countries because of that labor market supply side improvement. But going forward, there's still risks, and the Fed is going to remain very vigilant. Well, inflation is still somewhat high, and yet real interest rates are also very high. So there's downside risks to the economy, but there's upside risks to inflation, and the Fed needs to get policy just right. It's a difficult challenge. Also, we've had a dynamic supply side recently with significant improvements in labor supply, as well as the healing of the pandemic goods sector shocks. So there's a lot of difficult things to judge for the Fed here. Ultimately, policy is just going to depend on hard data. The Fed has emphasized their data dependency, but there's a lot of judgment in this, and they're just simply going to watch, is the economy going to be slowing sharply? And if they are, then this hiking cycle will probably end.